Good afternoon and welcome to today's daily recap. I'm Evan Lazarus. I'm CEO of T3 Live. Market taking a bit of a beating this week. We were red basically from Monday through Friday, and we basically gave back all of the prior week's upside. So, this market has been volatile from basically week to week to week, and as I show you the weekly chart, you'll see that with the last 4 weeks being up down up down. Where I think it's a little different this time is that you're seeing a lot more selling, a broader array of selling that I think we've seen throughout this whole sideways 2015 cycle. And we have made really a lower high here. So this is the sort of this lower high pivot after making retesting highs, failing at highs. We've then made a lower high and have turned down. So this market could be setting up for what I think will be lower prices, and you're seeing it actually reflected, in my opinion, in across the spectrum. This week we saw banks and brokers start to break down some of the financials. Goldman turned down, Morgan Stanley turning down, Citigroup turning down a little bit. Again, still at high level places, but starting to see some, with Citigroup as an example, again, just showing you financials, a lower high in place. So whereas, after a spike high, a pullback, making a lower pivot, excuse me, and then turning down could spell trouble. Tesla post earnings this week, just to recap, breaking down. IBM breaking down. And I will say the most important, the one biggest change that I think this week had was biotech. Biotech got hit and got hit hard on the latter part of this week, and pretty much all biotech for the first time to me looks very, very toppy up here. You can make the argument you have some sort of head and shoulders pattern. You have a high up here with lower highs on each side, and a couple of days of maybe into next week, a few days of some price action could set this up into a bull flag for lower prices. So keep your eyes on biotech. That's the one beacon, if anywhere, that we've seen strength throughout. As the market has gone sideways, biotech for the most part has been sort of that beacon of stability and strength, whereas other sectors and other indexes have seen some selling. Semiconductors, we talk about the NASDAQ semiconductors, still breaking down and acting weak. AMAT, CLAC, all stocks that are looking fairly suspect here. So that's the big, I think to me that's the big difference that I saw this week is specifically biotechs, but nevertheless the market certainly changing its tune and its tone as the spiders here as a reflection of the S&P, pushing lower aggressively there Thursday and Friday. It'll be interesting to see what next week sets up. There's still opportunity for this thing to set up and go much lower as we kind of look at the bigger picture, so to speak. Support really doesn't come in till as we are well aware down here. So the market could easily begin to make a run for that lower level, and potentially below that sets up for lots of potential. So be very careful. It looks to me, as it has looked for me, this market is sort of carving out this broader, topping pattern. Again, with markets, they have very distinct characteristics. And tops, as we talk about a top happens over time. So a pattern like this is very reflective of a topping pattern. It has been building over, a 8-10 month window, and potentially isn't even complete yet. It won't be complete until it, potentially breaks down, snaps back, and then begins to, work its way lower with a series of lower lows and lower highs. But nevertheless, the formation, in terms of what a top is definitely underway here. And I say definitely with, some certainty is this is, very characteristic of what a traditional topping pattern looks like over a larger set of time. And tops, as I've gone through in many of my training, tops build, right? It's a series of movement of price that happens over a longer period of time, whereas bottoms happen. Bottoms will go down and bottoms will go up. So bottoms take the shape of the V typically as they happen, because bottoms usually are one moment in time, right? Just this sort of low then turn, whereas tops are, more, along the lines of, something that would over. So this is, for what it's worth, this to me seems like it's setting up in that regard, which, makes this market suspect to go, potentially lower. And as I've stated in other videos, just to kind of have some perspective. When I say perspective, we look at sort of where we've come from. Let's just make some assumptions here that our 2009 lows and the assumption that we've maybe have seen our highs here over this 5-year, 6-year cycle, where the market has basically rallied off of this. Again, bottoms happen, right? Here's a good example, right? Bottoms happen, and potentially if this were some sort of topping pattern, right? And the reason I do this is not to sort of be doomsday or bearish, but to add a layer of reality as to what this market may be setting up to do. And the reason I do that is because I want you to be aware of what a 38% retracement looks like and what a 50% retracement looks like. And I'm not suggesting that we go, the market goes down to these levels all in one fall swoop. But what I am suggesting is that the reality of the possibility of this existing becomes, I think, a lot more real. So you have to account for that and think about how you can position yourself, in terms of opportunity to participate in that potential trade if that were to happen, versus the risk, right? So the risk is what we would call X, and the reward is potentially, whatever the downside may be. Even if it's a 38% retracement, still represents a good risk-reward scenario. And if not actually participate in downside, it's maybe lighten up on your longs so that you take risk off the table. Because to me, what this market's doing up here presents a risk-on scenario for new longs, putting money to work to the long side. And again, I talk about, the market. Obviously, stocks, it's a universe of stocks. Stocks will do their own thing. But I think it's important to just be, aware of, let's just say, the bigger picture. So, if the market were to correct down to this area, hypothetically, that's still a relatively bullish, healthy correction. Now, if it were to do it in some sort of manner that's fast and furious, and the market were to unravel, it would freak everybody out. But the reality of it is, like I said, is you have to have some perspective, of what this market is doing or can do, or potentially downside opportunity. So, I know that sometimes I will, I get painted in a way that makes me the bear guy. But the the truth of it is, I think everybody needs to have just a little bit of a dose of medicine as to what the market may or could do, so that you understand the risks, right? All I'm doing is saying that the possibility exists that we are developing a topping pattern up here, and if that is the case, that would suggest the market is ready for lower prices, and lower prices can be, down to here or even down to here, and still be considered relatively normal in the spectrum of the bigger picture. So, that's pretty much, my thought process, and again, it is, we'll know, about whether or not that's reality in time, right? I'm not suggesting that happens Monday, Tuesday. I'm just saying over time, this is something we need to, you need to keep in your, I would say, immediate radar. The first real area of support in this market, to me, doesn't come down until around, in this general zone. Once we, convincingly break out of this little range that we've been in, if we were to break to the downside, it presents the possibility that over the next several weeks and months, we can work our way down, if not sooner, back to the October lows or the early 2014 area. So keep that in mind. Again, anything can happen, and the possibility also exists that we can, break to the upside, out of this range and continue higher. So, but based on price action of stocks, especially some of the ones that have been leaders, financials, biotechs, if those start to come undone, then the market the market will come undone. So keep your eye on some of those key areas going into next week and the weeks that follow. All right, everybody. If I haven't said it, the Finance Festival setting up to be a fantastic event. If you haven't seen the T3 Live Finance Festival, it is t3live.com/festival, and we have an amazing presentation, series of presentations that we're going to put on that I really think will give you a very unique perspective on the markets going into 2016 from some people and some minds that I just think are absolutely brilliant. I'm very excited about this event. I think it's going to be one for the memory books, and for those that are going to be there, they're going to be, probably very, very, very happy you were there. So just bringing it to everybody's attention, the early bird rate for tickets is still in play and will be in play until, I believe, the end of the month. So make sure you, till September 15th, but we have limited hotel rooms left. So make sure you register and you get yourself down to South Florida, because I'm telling you, you're not going to want to miss it. All right, everyone, have a nice weekend, and I'll talk to you later.